All right, Bulls and Bears, back with another dose of economic reality. A lot of craziness to uncover today, to unpack for you here in this video. You're not going to believe who's getting the bailouts this time. What industry is getting the bailouts? Well, you may believe it. I'm going to talk about that here in just a few minutes. But let's go ahead and get started right here. Kind of the biggest news story out there is how McDonald's is losing revenue. Actually, let's start at a different one here. Weekly jobless claims. Weekly jobless claims just surged more than expected. It's 241,000 in 1 week, folks. So you annualize that, you're close to 1 million jobless filings. And we were told again that this was going to be a turnaround economy. On day one, things are going to start turning around. Things are just as bad or worse than they've been. And I'm not saying I want this to continue in a bad direction, but you've got to just look at the numbers and realize things aren't getting better. People are getting further into debt, further behind. More rescue programs have to be announced. And we'll talk about the bailout that's going to be happening here in just a minute. But first, the new unemployment claims or filings, a big portion of that, a big chunk of that came out of New York, where actually claims for unemployment had doubled this week or last week. So it's very interesting to see how this is impacting different areas. We all know that D.C., the Maryland area, Virginia, more heavily hit than some other states because of all the federal employees out of those states. So a lot of this is going to be regional and local. And we're seeing an across the board slowdown in demand. And of course, we said this was going to happen as soon as we started seeing the agencies getting cut, all the layoffs, the federal workers. Even before that, it was bound to happen anyways, just because of the enormous levels of debt and the high cost of living. Folks, what just happened, though, that reflects this or that underpins this is that manufacturing activity just plunged to a 5-month low, as it's described here as businesses being in the state of fear right now. Fear and panic and paralysis is what they're calling it, right? Some pretty strong words. But yes, we were bound to see this slowdown, folks. U.S. manufacturing activity slowed to a 5-month low as the tariffs continue to create uncertainty for businesses. Now, right when the stock market started selling off, we had pointed out right here how strange it was to see such a big sell-off because of the fear of inflation, when we didn't see the stock market sell off over the past 5 years when we had enormous inflation. The stock market didn't sell off. It just kept going up and up and up. So we told you here from day one that really didn't make sense, and I would have expected a recovery or a bounce. And we did see a significant bounce. Let's go ahead and bring up a chart here. Now, we're still down quite a bit from the peak, but you can see pretty big bounce there. I mean, coming off these lows, and this is the Dow Jones, coming off of the 37,645, we're now back to 40,700. So a 3,000 point swing just in a matter of a few weeks. That's the Dow Jones. Let's jump over to the S&P and see what we're looking at on that. Just do a search here. And similar, go out to a year-to-date chart, similar bounce here. Look at that. Right? So I'm not saying I'm going to go long in these markets. I'm definitely not. But I told everyone here that I was going in on some stocks when we saw the huge drop. And for those of you that also did the same, it paid off pretty well, folks. I went ahead and sold a big portion of what I bought on that dip because I expect a further downtrend in this, right? But when you look at the enormity of the sell-off that happened, which actually was considered bear market territory with the percentage drop being over 10%, it didn't align with the previous inflation that we saw over the past 5 years. Again, if inflation was the big fear that made the stock market sell off, why did the stock market go up in the face of inflation over the past 5 years, right? Disconnected, doesn't make any sense. So, of course, we knew that the market was going to bounce. It was pretty simple. All you had to do was add 1 and 1, and there you go. So congrats to the people that bought that dip along with me. And we'll do that here on this channel from time to time. We'll look for trades. We'll look at the news. We'll see things that don't add up or things that are opportunities, right, to try to make money. Because what good is following the information, following the news, if it doesn't help you in some way, if it doesn't help you financially, right? And I've gotten many emails over the years, people thanking me that actually bought a home, thanking me that that I predicted that the housing bubble was not going to go bust. One of the only channels that only channel of that I know of, but maybe there's others out there that did this, but the only channel that I know of that predicted home prices continue to go up. It's simple. What did they tell us? They said, what did they say years ago? You'll own nothing, right? That plus the promises that the banks were made, that the banks were always going to be funded, that they were not going to be allowed to go under. So from day one, we knew that this was going to be the case. Inflation on top of inflation, helicopter money throwing more fuel on the fire. So inflation, right? Now we're seeing things start to slow down and shift into reverse, though, very slowly, right? These things are playing out very slowly. Like home prices are down now somewhat from the peak. Definitely not a crash, just like we said. We said it was not going to be a crash. There's too much propping up of these bubbles for there to be any sort of crash or collapse. Same thing with the stock market. We knew they were going to pump this market back up. It was easy to see. But consumers are feeling the pinch. McDonald's sales drop as diners face uncertainty. A lot of that's because so many job losses have happened in layoffs and cuts and all this, but also because the consumer is concerned. Price levels are already high. We should have seen a correction by now that would have brought the cost of living down, right? Recessions usually are corrections in prices. Prices usually come down during recessions, but this one looks to be like it's going to be an inflationary recession / depression because they have unlimited propping up capabilities to keep markets from collapsing. But consumers are not getting endless money thrown at them, and therefore they're cutting back here. Revenue at U.S. McDonald's outlets have been open at least a year. Locations that have been open for at least a year, saying 3.6% in the first 3 months of 2025, being the first quarter. Welcome to the month of May, by the way. So we're already 1/3 of the way through the year. So 4 out of 12 months in the rear view mirror already. 2025 seems like it's flying by already. Revenue at McDonald's sank. That is the steepest decline in like-for-like sales in the U.S. since 3 months to end June 2020. Wow. When the health crisis was rolled out. So that, folks, should tell you something. We're seeing, if you look at McDonald's, we're seeing the biggest slowdown since the health crisis onset, from the onset of the health crisis, right? So what does that tell you? What crisis are we in now? Is it the uncertainty crisis? Is it the fear crisis? Is it the fact that there's already just been so many cuts that we're seeing such big moves out of the economy, big amounts of money being pulled out of the economy because of the cuts and because of all the audits? Don't forget all the funds that were flying everywhere, all kinds of different programs that we didn't need, what they're calling waste and fraud. That money was stopped, and we knew that money velocity was going to have an impact as well. So nobody knows exactly where this is going to end, but prepare for more fireworks here, because there's going to be a lot of opportunities coming up here with what we're going to see rolling out here just in the next few months. It's going to get wild. It's going to get crazy. But back to McDonald's a little bit more here. Low and middle income consumers are increasingly shying away from fast food restaurants like McDonald's, a sign that people are pinching pennies amid recession fears. Yeah, plus a little small milkshake costs only almost $5. At least at my McDonald's, when I tried to do something nice for my kids, I was like, okay, let's go get you a cheap treat. It wasn't cheap. It was like almost $5 for a small shake. If the shake machine is not broken, I got lucky and the shake machine wasn't broken. It seems like when I did drink shakes, the machine would be broken a lot at McDonald's. And I know some of you are going to chime in, JJ, don't drink that stuff. Yeah, I don't. It's rare that I'll go drink it. It's not even real milk product from what I hear. Maybe I'm wrong, but that's what I've been hearing. With economic uncertainty, Americans are spending less on fast food. So it's being reported on a lot of different outlets here. Fast food chains have noted economic uncertainty is weighing on consumers. Another McDonald's story, folks. So there you go. And look at the story right here, folks. The industry that's getting the bailouts. Some of you probably guessed it if you didn't already know. Egg companies getting government bailouts. while price gouging customers. Is that right? Egg prices reached another record high last month. That's another thing. We were told they were going to come down. It now costs the average American shopper an average of $6.23 for a dozen, nearly five-fold increase from 2020. Families have been squeezed. And they say that they're gouging consumers now, kind of like the used car market when vehicles stopped being imported for a while. We saw shortages and inventories of vehicles decline, so therefore they raised the prices. And of course, stimulus checks and all that really increased the demand for vehicles. We're talking about 2020. But the profits of dealerships actually increased during that time. So they used the excuse of shortages, and there was, supply chain disruptions, and there was, but they used that excuse to hike up prices even more than was necessary. And we see that a lot with different industries. They'll hike up the price just based on a backstory. And it goes on here. This is being reported out of The Hill and others. It gets worse. Cal, Maine, and other AG companies were breaking the bank at the same time. They were also quietly getting millions in taxpayer-funded relief payments from the government. Congress and the administration must put a stop to this. No company that is getting corporate subsidies should be allowed to hike prices and extract windfall profits from American consumers, right? We see this a lot. We see industries that get money thrown at them, for lack of a better term, and still the profits go up. We see it with the banks. The banks, like we talked about a few minutes ago, are going to be propped up no matter what. If they have to print trillions of dollars and hand it out, they will. The banks are going to be propped up no matter what. And so what happens, of course, they have no reason to be cautious because they know they're going to be propped up. So they're just going to loan out all kinds of money without worry that it's going to be paid back because it doesn't matter. They're going to get propped up anyway. So naturally, when you can loan out endless amounts of money without worry, you're going to give out huge bonuses. You're going to rake in the profits because more loans equals more revenue. And if you don't have the worry or fear of these loans not being paid back because you're going to get propped up to infinity, you're going to make a lot more money, aren't you? Pretty simple, folks. I mean, this stuff is so simple to figure out. It's like almost like kindergarten stuff. All right, now we just talked about bubbles a few minutes ago, housing bubble and others. But here's the median home income that's needed to buy a median priced home. U.S. households need to make $114,000 to afford a median priced home. Much worse than some states like Hawaii, California, and others. But folks, that is huge. A household needs to make six figures to afford a median price home, according to Realtor, which found that the income required to affordably purchase a home listed at the median price has went up 70% since 2019, from $67,000 to a current level of $114,000. Folks, I mean, this bubble, you would think it would be going burst, that prices would be collapsing, but it goes back to the banks, again, have been promised endless life support. So that's why we're not seeing these bubbles burst. Much different than the 2008-2009 housing bubble that went bust. At the beginning of that bust, banks didn't know, they weren't sure they were going to get propped up. Of course, now they know that. So that's why prices are remaining high, folks. Pretty simple, right? And next here, moving on real quick. Speaking of high home prices and what goes along with high home prices, more homelessness, a devastating loss. They're kicking homeless people out of a national forest outside of Bend, Oregon. And this was a lot of people. Here's a picture of a lot of junk. With less than 24 hours until the Forest Service locks the gate in this national forest southeast of Bend, Oregon, longtime campers, aka homeless people in this case, scrambled Wednesday to move their trucks. That's the what's that called? Campers. Long-term campers are the PC way of saying homeless, I guess. They have to move their cars and trucks and at least one old bus to avoid an eviction that was years in the making. More than 60 people remained out of about 200 who lived among the high desert Ponderosa and Juniper in an area known as Cabin Butte Project. So they're kicking these people out. These people aren't allowed in the cities now, in some cities. So then they go out to the forest, they go out to the wilderness, they're being kicked out of there. So if you can't live in the city, you can't live in the wilderness. I mean, where are you going to live at, right? In the middle of the road, maybe, the middle of the highway, folks. So it's and it's about ready to get a lot worse, folks. This year, I think we're going to see the biggest surge in homelessness that we've ever seen, because nothing is being done to address the underlying issue, which is the endless money that's being thrown on this fire. It's more fuel on the fire, right? Creating money out of thin air is not going to fix this. It's just going to make things worse. We are seeing some deflationary things happen, though, and it's going to be a battle of inflation versus deflation. If we don't see either side win, you could see stagflation, which is even worse, I think, than either one of the two. Well, it's not worse than inflation, but you're going to see massive job losses and price levels still remain high. Normally, when there's massive job losses, prices crash because the buyers are gone and therefore prices come down. But when you're endlessly propping up the system and the system of lending out money in the banks, the opposite happens. Prices stay high. So something big has to change, not just these little things, tax cuts over here, cutting spending over there, forgiving debt for this group or that group. You know how they're picking and choosing who gets the debt forgiveness. None of that stuff's going to work, folks. It has to be big, major structural change, which we're not actually seeing. Will we see it? Some people say yes. They say this is just the beginning, that there's going to be a lot of bigger and badder things happen, or better, depending on your scenario, right? So let me know what you think about this. We're going to wrap this one up, folks, and I got to get out of here. So let me know what you think down in the comments. As always, keep stacking, and we'll see you here very soon on this channel. Subscribe if you would. Help you keep this channel alive right down here below my finger. That button. Pretty please. Thank you. Keep stacking, y'all. Bye.